Hi, everyone. Welcome back to the Brydge Club podcast. This is your host, Ruffin. Today, we're chatting with Valentina Rodriguez, investor at Wonder Ventures, an early-stage venture fund based in Los Angeles. Previous investments include Clutter, Tala, Honey, Whatnot, Coinbase, and Bird. Prior to venture, Valentina started her career in banking with Morgan Stanley before founding her own business, Cannaves Oliva, a functional foods company that launched with an organic hemp-infused olive oil. So without further ado, let's dive in. Okay, so before we get into your experience in venture, let's talk about the business that you started. So you previously started a company called Cannaves Oliva, which I'm sure, again, I just butchered the
No,
pronunciation.
that was perfect.
Amazing. What was the business and what inspired you to start it?
I will give you the long story of this, I guess. So I was in my banking career out of school. I was at Morgan Stanley, still on the equity research team, and I was training for a 200-mile relay race that a friend of mine had looped me into, and I developed pretty severe tendonitis in my ankle while I was training. And kind of comes with the territory of being someone that liked research. I went all in on physical therapy several times a week and just went down a rabbit hole of researching athletic recovery tools, practices, supplements I could be using alongside PT to be ready to run this race. I got injured in March and I had to be ready to run in August. So it was a pretty quick turnaround for me to go from almost tearing a tendon to
Yeah.
being able to run a 200-mile relay race. And while I was researching kind of everything under the sun that could maybe help me make this a really quick recovery turnaround, I fell down the rabbit hole of researching a lot about cannabinoids and the potential for them to deal with anything that was like inflammation based, which tendonitis is largely due to a lot of inflammation. And in general, fitness related injuries have a lot of inflammation elements attached to them. And so deep dive into what were the products that were on the market and how could I find them, use them, make the most of them in the quick timeline that I had. And while I was looking for products that I could use, I realized that everything that was readily available, and this was kind of pre the whole CBD boom. This was 2018, 19, probably 18. And I couldn't find any products that fit with my general lifestyle that were clean, organic. I could actually understand the supply chain of where they came from. There are a lot of elements of the plant itself that necessitate those things more than some other products might actually. And so I realized that this didn't exist, and I had always been antsy to start a business. And so I decided to make this product myself. And what I originally was going to launch was an athletic recovery ready to drink beverage that had protein, electrolytes, and was powered by CBD to help with athletic recovery. And I was working on this with a college friend of mine and another friend, and we were about to go into our first production run, and COVID happened, and our entire go-to-market strategy, which was partnering with fitness studios and launching into them, was obviously not viable anymore since the entire world was shut down. And so on the side, I had been trying to understand a lot of elements of our supply chain and the regulatory world, and the formulation, just the entire kind of product. And I had been developing an olive oil version of the product. And when the beverage athletic market was not really something that was like readily accessible from a go-to-market perspective, I decided to just launch that other olive oil product direct to consumer. And so I wound up launching that during COVID.
I feel like I've never heard of an olive oil product with those kind of health benefits. Is there anything out there that existed, or how did you even go from the drink to the olive oil product?
Yeah. Actually more straightforward than you would expect. The way your body absorbs it, it's it attaches to the actual CBD compound attaches to oils. And so rather than something that would, attract water or whatever the opposite like compound attraction is, when you ingest it in an oil based solution, your body absorbs it much more readily. And so that was why we had been playing around with olive oil in the first place and like elements of the formulation or going into the beverage we're playing off of that. And so it was kind of just two ingredients, tasted really good. The formulator and the chemist we were working with were really like playing off the elements of the flavor profiles of all the other cannabinoids that were in our extract. And it was really earthy and delicious and just played into a really great tasting olive oil.
So fascinating. Is it still available today?
No, I'm not producing it anymore. The supply chain partner I was working with, we kind of offloaded everything too and moved on.
And so what led you from that to venture?
Yeah, so I pretty quickly, as you can probably gather from my lack of enthusiasm when I say D2C, realized that I had no idea what I was doing operating in that space, but I loved going from the ideation phase to the early, launching and early growth of a company. And I quite frankly missed investing, and I missed all of the elements that come alongside, research and investing. And I wanted to tie those two things together. So I wanted to be doing really early stage investing. And right as I was picking my head up from having that realization, I had moved to LA during COVID. So I was building my business out here, and I had gotten introduced to two really amazing women through friends when I moved out here. One of whom was a woman who used to be on the Wonder team. She went over to a portfolio company, and when she left, there was an open seat for an investor on our team. And the other woman who I completely coincidentally and separately was introduced to was our head of platform, who had joined the team about 3 months before this other woman left our team. And so the two of them, when our GP was looking for someone else to join the team, brought it up around me. And I was kind of like, well, wait, this is exactly what I want to do. I'd love to meet him. And we got connected and had some great conversations when I joined the team. So it was very much fortuitous timing and meeting of the right people.
I obviously know the Wonder thesis, but can you share with our audience like what you invest in at Wonder Ventures? And is that tied at all to the banking experience you had before coming to venture?
So I, on the banking side, have covered every industry under the sun. I started my career doing research on the credit side, and I helped out with the credit analysts who covered a lot of industries. I then traded all of those industries, amongst them retail, several consumer sectors, biotech and pharma. We really looked at everything. I sat next to our industrials analyst, so I absorbed a lot from him. And then when I went back into research, I traded for about 2 years. And when I went back into research, because I missed research, apparently I'm a huge nerd, I, again, was a generalist. I sat on a strategy team. So we straddled our economists and our industry analysts. So I touched every industry in that case as well. So befitting that I am now, again, a generalist. So on the Wonder front, we are primarily geo-focused and stage-focused. So our thesis is finding great super early founders building pretty much anything under the sun in LA. Funny enough, we don't invest in CPG. That's kind of one of the exceptions. And we do a lot on everything across consumer, e-commerce, retail. And we're about 50-50 enterprise consumer tech. So everything on the B2B and enterprise side. And then stage-wise, I was really excited to join because nothing is too early for us. We will invest in a team, and we have invested in teams to leave their jobs at, XYZ big tech company or startup locally to go pursue their dreams and build that next great platform.
Yeah, so when you say never too early, does that literally mean the business is being like legally formed for the right team, or what do you mean by that?
Oh, yeah. We have literally invested in people who we connect to the lawyers who are helping them form their companies. I guess I will caveat this, since I know this will go out more broadly, by saying when we do go that early, it's often teams that we have spent years getting to know and really understanding how they build product and how they ship and how they think about growth and all these elements that will contribute to a team that is someone we can really get behind that early, versus we met you as you are starting to have conversations and you're as early, but we're not able to form the same level of conviction and confidence and understanding how you're going to build and iterate. And so sometimes you might be too early for us in that we haven't had, the few months to get to know how you build and how you recruit, and all these elements of play into being a successful founder. And so we might take some time to get to know a team and see how they actually do those things.
I feel like so much of fundraising goes back to the relationships. So that makes a lot of sense.
Yeah. And there were so many examples. One of my favorite investments that I've made since joining our team, I met the founder. She had an idea and a vision, and there was nothing really built yet. And she wasn't technical herself, so she was planning on recruiting tech, and loved her and loved her vision. But it wasn't to a place where we could build conviction on investing. And in the best case scenario possible, she spent the next year and a half actually putting pen to paper and finding the tech team and building it out, the product, to the point where it was ready for me to be a user, and I was obsessed with it. And I was so excited to have spent all that time getting to know her and how she operated, and we're now proud members of their cap table.
Amazing. To that point, can you share maybe an example on both like the consumer tech side and enterprise side of like maybe two companies you've been really excited about or that your team has recently invested in?
Well, to piggyback off what I was just saying, I was talking about Locker.
I was wondering.
And I know you know Christine well as well. Locker is essentially Pinterest, but built for shopping. So Pinterest, you go on, you're inspired by everything you see. You wish you could click into, that couch that fits into the aesthetic for your living room, but it's not a shoppable, it's a dead link. And while Pinterest was not built for shopping, Locker was. So all of the social elements and all the elements of the product are really tied to being able to be inspired to inspire, and to do that passively, really. So like, I am guilty of loving to shop, but I am not a full-time influencer. I don't aspire to be a full-time influencer. And my friends often ask me, like, where are you getting stuff for weddings? You're going to a million weddings too, I know. Or like, how are you decorating your house? And I will just, when I'm doom scrolling, if I'm bored in a car or whatever it is, and I'm shopping online, I will save everything into collections. And I now am passively making these lists that might inspire other Locker users, my friends, my family, etc. And it's just really addicting and highly recommend.
I love it so much. Like, I just love how much more intentional I can be. And I feel like I'll look at like dresses or work clothes for so long, and then I can go back and be like, oh, yeah, that was that thing that I loved. And now I want to buy it.
Exactly. Instead of like, you have 10,000 open tabs on your phone, or you're sending your mom and your sister and your best friend 30 dresses that you're thinking about getting for two things. And you can really, again, like you said, be really intentional about what you're actually shopping for. So that was one on the consumer side, and they've grown really well, and Christine is a force. So super excited about that. On the B2B side, we've touched a bit of everything, I guess, to play into kind of what's topical right now. We've obviously made several investments that have elements of AI or are entirely AI. One of which is a company called Brox, which is another deal I led in the past kind of year or two. And they are basically building the next generation of market research. So where Nielsen and all these legacy market research companies did their research specifically for a client. So I'm Pepsi, I'm coming to Nielsen. I have a really specific need of a question I need to have answered for a big marketing spend. And so Nielsen will call them and say, okay, we can survey these, 100,000 people that fit the general criteria of demographics that you need to answer this question, and run this process for you, and you'll get an answer from real people for this question. And all of that data is owned by Pepsi, not by Nielsen. So if Nielsen wanted to go put an LLM on top of all of that data and feed this to anyone else, they can't structurally. Like they weren't built for that. And so Brock has completely flipped the table on what market research looks like, and they have built out their own network of people that are doing these surveys, and any subscriber to the Brox platform, that could be a giant conglomerate like Pepsi, can go in and ask the question that they have, and they're still getting results that come from real people answering questions, but there's a lot of data that they can extract and create synthetic data on top of from the way that they're collecting all of that data. And so in its end state, it looks more like what they're calling kind of an oracle of opinion than ad hoc going and doing market research one client at a time with no other use for that data. So really excited about them. Another fourth of a founder and also LA based. So
amazing. Yeah, outside of these two companies, any like trends you're noticing, especially since you're focused in the LA ecosystem and things that you're excited about investing in the next few years?
Yeah, LA sees a lot of the same trends that we see more broadly. So like we saw the crypto wave, we are seeing the AI wave, and that kind of just comes from there's pools of talent that are working for companies that have been leaders in these spaces based here, or people that were in the Bay or other geos that have moved to LA, be it for lifestyle or for whatever reason. So we see all of those. LA people, I feel like, only tied to Hollywood and entertainment, and there are really so many industries that are really strong here. So we see waves of, yes, everything from the entertainment side, like what is the next, frontier of entertainment, be that like consumer social or something related to streaming and content. But we also see, this is a huge hub for everything aerospace and defense, and El Segundo is booming, and we're seeing so much exciting stuff coming out of there, and people leaving SpaceX to start, hardware companies that are dealing with climate problems, and a lot of really, really exciting deep tech that is really unique to LA because that talent doesn't really exist anywhere else. Also, aside from like maybe the Bay, maybe Texas at this point, but LA is stronger than pretty much anywhere in that front. And we've got everything from the biotech and medical devices side here and in SoCal broadly as well. So we really see a lot. And then we have all this like really strong talent coming out of Google, Meta, Amazon, who like you don't realize how many people work for those companies in second headquarters down here. And so, yeah, we see a lot of the same waves, things I'm excited for. I think everyone's saying this, but AI has made investing 10 times harder. So I think the filter of like what passes the bar of being really net new, really defensible is much higher than it was when I started this role even 4 years ago. So just like crazy to think how quickly that shifted. So this is going to seem broad, but I really am just excited to find the teams that show us a vision for a product that really feels unique and exciting, that they have a really unique background that suits only them to build and solve this problem.
How do you navigate that as an investor, like these different
Yeah.
hype cycles? Because I feel like crypto and Web3 was like the past AI hype that we're now seeing. So like, how do you think about how do I look through and, figure out who will actually be the big companies in this space?
Yeah, it takes a lot of diligence and a lot of self-restraint. And it's hard, honestly, because you see really, really talented people that you want to say, I will back you to do anything because you're just amazing. And we are in the business of backing people, especially pre-seed. Like we're doing diligence on a person more than we are on a market. Like you're more times than not creating a market. So like how much work can I actually do on market analysis? Like it's usually seldom. It really comes down to spending time diving really deeply on whatever that new industry boom is and distilling a lot of information, like what's been solved for, what is actually going to endure past the boom through the bust and actually like remain as technology that is useful beyond just crypto or just AI, or like really what's creating like the next platform, the next infrastructure, the next layer of data, or the next consumer platform. And that just takes time to like absorb as much information as possible, whether it's listening to podcasts or reading books or just talking to everyone building in the space, which comes with time. And there's no easy way around it, honestly.
I feel like as a generalist investor, it feels so overwhelming to like become an expert in all these spaces of like AI to like space tech to consumer.
And I'm not going to pretend I'm an expert. Like, we're not experts in any of these. We'll try to get as close to expertise as we possibly can, but we really, like I said, are betting on people. And so more than anything, we spent a lot of time getting to know a team and really understanding. I mean, 9 times out of 10, what you pitch us in a first meeting is not going to be what you IPO with. It's going to be so far from that product and thousands of iterations away that we really want to understand that it's a team that is capable of doing the quick, nimble building and iterating towards finding something that is really lasting.
I think it's super cool that you bring not only banking background, but also operating and founder experience. What like lessons or things have you drawn from each of those experiences to bring into venture? And I guess for people looking to get into venture, like what advice would you have? What kind of experience do you think people need to bring to teams?
Yeah, I think it really depends on the fund you're joining and their investment thesis. If you want to join a growth fund that is leading, Series C plus deals or even early growth funds where you're doing AB, like, you're going to need much stronger financial skills and like truly a banking or private equity background than if you're joining an early fund, or if you're joining a fund with a role where you're not necessarily an investor. You might be a platform or community person, or kind of sit on the operating side of things. And people don't really know about those roles as much either, which I think is such an underrated opportunity. When I talk to people who are looking to break into venture, I couldn't recommend more spending some time, either if you're in college, so like intern for a startup, get to know founders in your community, whether it's your university or if you're lucky to be at a school in a city, like, get to know the startups that are being founded and like email them to see if they need an intern. Most people do.
I feel like they all
And
do.
they really do. And having any sort of experience at a startup, especially when it's early, you're gonna wear so many hats and you're gonna understand so much that goes behind building a business that you're going to be much more attractive to a venture team when you're looking to join, because you actually can talk to a founding team from the perspective of someone who's been in their shoes or close to their shoes, or really like provide some sort of experiential value to them. And so, and then like the finance element of it is not trivial, right? Like, we are managing capital for other people, and it is our job to return on that investment. And so, really, I think it's also underrated that you need to understand how to think about risk and capital and assessing investing from like a true financial background. And a lot of what goes into our job to being helpful for our founders is the next fundraising round of theirs. And so being able to get into their financial models and say, this is not, think about these elements, or like breaking down their models in a way that's like really helpful and helps them level up to the expectation that a growth investor is going to have, is also something that is a skill that maybe you don't need if you're, we're one of the first team members at like a super successful startup, and you're coming in as a partner right off the bat, but like, your founders are going to care and they're going to get it from someone else if you don't have that.
To that point, what are you seeing at like the Series A, excuse me, stage these days?
An interesting world right now, I would say, although it has been like my whole career, because I joined our fund 4 years ago and I came into the craziest hype cycle in venture that has probably ever happened. And people were doing Series A, or what was a Series A round that would be, a pre-seed now. Like, it's, but at crazy
That's insane.
terms. So I've seen that through to a bit of a level setting now, where Smart investors are obviously looking for all these diamonds in the rough where a company has actually found some product market fit and some real revenue, and they have a really clear path to building a large business. How big that is and like how much revenue there is and a lot of these factors vary, and that'll obviously impact like the dynamics of what your round plays out like are you raising 10 million at 100, or are you raising 5 at 30? Like whatever it looks like is obviously going to be completely based on all these elements, but everyone's chasing quality, I guess I would say. So there's still like the hot Series A companies that are going to get those crazy deals because they are the ones that are seeing product market fit and creating new markets and really booming. And so that's never going to go away, in my opinion. Like there are always going to be these outliers, but it's taking longer to run these processes, even in hypey markets. It's just a tough market for founders and for investors.
So true. What are some signals, in your opinion, that show product market fit?
This is going to sound somewhat nebulous, but because I haven't like assigned a strict formula to this, and I know there are some out there, but just the velocity at which you're finding that product market fit, right? So you may have existed for 3 years, but in the past year, you pivoted towards something that went from growing like this to growing like this, and you're showing that. We could see 3 months of this, and it's already going to be a strong signal for someone that's going to jump in really early. And again, like how we think about pre-seed, there are Series A investors are thinking the same, although with way more data. Like some might be happy to jump in after 3 months of the hockey stick growth, and some might wait 6 months, 9 months, whatever that number is, according to their models and their formulas for investing. So it's really just once you're finding that it might be your first wedge, like it might be the first market that your product really works for, but seeing that explosive exponential growth for a sustained period of time, could be 3 months again, but really demonstrating that and demonstrating that you understand, if that's not a big enough market, how you're going to recreate that in the next market.
So we've talked about your investor role in terms of like sourcing, diligence, and supporting founders after investment. But your role also entails fundraising from LPs, and your team recently just closed a $57 million fund 4 and a $45 million later stage opportunity fund. So can you share a bit around kind of the fundraising process as an investor, and what that looks like from the VC perspective?
Yes, happy to. I will caveat this by saying that we had a really fortunate position to be in where we've had some really great partners in our LPs since early on. And after some of our early funds had done pretty well, they were really excited to kind of preempt us in the same way that we would preempt the founders fundraise. And we were very excited to have some partners of ours on the LP side double down and really help us get to this next level of a larger fund and a new version of a fund with our first ever inflection fund, which is our version of an opportunity fund. So I guess generally I will say a lot of founders don't think about this, but we also have to go out as VCs and pitch 1 million people to raise funds. Again, like I'm lucky to be in the seat I'm in, and Dustin, our GP, has amazing relationships with our LPs that he's fostered since his first micro fund. That was a $5 million fund. And by just being a very good capital allocator, has had some great fund returns. And so people are excited to back in and to back Wonder. And so
can you explain what an opportunity fund is? Because I feel like that's a term that's thrown around that is not totally clear to everyone.
Yeah, and that's kind of on purpose because it can mean a lot of different things. And I think funds, as the name suggests, try to actually be truly opportunistic with it. What it means for us, ours is called Inflection Fund 1. It's our first ever opportunity fund. And we are very excited to have this dedicated pool of capital to double down on our portfolio companies and continue supporting them beyond what we typically have reserves out of our core fund for, which is usually, if we back it at the pre-seed, it's the seed, maybe the A, kind of depending on how your round is priced and how big they are and all of that. And we had historically continued to double down on some of our portfolio winners beyond that stage through SPVs, and had found really great returns from that as well. Kind of follow your winners if you may. And running each of those is a really time consuming process and kind of herding cats in terms of like putting it in front of, when you're running the SPV process, putting it in front of your LPs and getting everyone to wire in time and all of that. And you might miss out on, XYZ now unicorn at like one round earlier, which is a 10x of a difference in terms of how you look at a return profile. And so we were very excited that our LPs aligned with us on wanting to be able to be flexible and nimble and double down on our portfolio companies as readily as possible. So that pool is still going to be for relatively early in our case. So primarily kind of pre-Series A, Series B, for our portfolio companies for the most part.
So on the topic of venture capital terms, I'm asking every investor this season to choose either a VC term, a startup term, something that might be confusing to others, and explain it to us.
Okay, this might not necessarily be a term, but I feel like it falls largely in line with what you're trying to accomplish with this. And I see it a lot. But oftentimes the team will come to us and say, we're raising our seed round, we're raising our pre-seed round, whatever first or second round you're doing. And here's where we are as far as like traction and product and building and growth. And here's what we're thinking as far as round size and what we have committed and where we're setting terms. And they'll just shoot themselves in the foot by having let friends and family and angels in at terms that no institutional investor is going to want. So for example, you're coming to me saying, this is our seed round. We're raising $3 million and our first angels were at 30 million post, and you don't have a product built. And you're not the former founder of Amazon. I don't know, I'm just like throwing a random name out there. Obviously, you're not Bezos. But that is just a position to be coming into a fundraising conversation from that is such a lose-lose, because you're either going to have to reset that, take a down round. It might all be safe and be meaningless anyways, but you're just coming in seeming like you don't understand the fundraising environment and what the market is actually pricing. And it's really off-putting to investors. And you might be able to raise from an incredible team at terms that make sense for you, and it's either less money than you wanted, but it'll get you where you want to be and beyond that point faster for the likes. And I don't know if it's founders get bad advice from angels, or they think that they're getting a good deal because they're taking less dilution for the money they're getting from angels by setting a high price. And the angels have no idea, because it's not their job to be professionally investing in these companies. And so I think something that founders or angels as well need to understand is that dynamic of waiting for an institutional to price around, or really just thinking through how you're communicating that and how you're anchoring the conversation for yourself.
Very interesting topic to bring up. Super important. So if a founder goes out and raises angel capital first, and then maybe a year later they do a pre-seed, how should they think about setting the valuation when they know their first round is not going to have an institutional investor?
Yeah. And it's honestly a really hard question to answer, because you do obviously want to get the best terms for yourself, and you don't want to give a ton of equity away to angels that may or may not be helpful. It might be friends and family, and love friends and family. They should be bought in, and they want to support you. And for the most part, they're investing because they want to support you. And if they understood what the dynamics of how that would play out for you when you're raising institutional capital, they probably would not care and would still be supportive. I think the best move, if you have the access to the network, would be talking to people that you might want involved in that next round of institutional capital and get a feeler for, hey, if this is where I am in my roadmap of, building and traction, how would you think about pricing around right now, and how would you think about where that might be in 6 months to a year based on where we think we're going? And the same way that you would do it with an institutional, like, think about pricing that in a way where you're getting the best deal possible for yourself, but you're also setting yourself up for success when you're having those conversations with institutionals at your actual round, or at your first institutional round, your second, or whatever it might be. But it's tough.
I think this is a good clarifying point. Like, when founders go out and they start pitching VCs, like, should they rely on having their lead VC end up like setting and negotiating the terms?
There are, and again, like, to clarify, when I was a founder, I didn't raise any money. And so I haven't actually sat on that side of the table. And there are some founders of ours that are far better fundraisers than I would probably be, even having been on this side of the table. And so it's definitely a bit of a game. But I think coming into a conversation, if you haven't done so much research to understand where people are pricing deals, and knowing that you're giving a realistic expectation of where you want your terms to be set, however you anchor it, people are going to be judging you and the potential of your business based off that anchor. So if you come in and you tell me I'm raising at a 10 post versus you come in and you tell me I'm raising at a 20 post, those are two very different bars. That is a very large return hurdle to surpass from our end, as far as like how we think about exits and fund modeling and a lot of elements that go into our decision-making process when you invest, that go beyond just like market dynamics and where an early team is traction wise. Yeah,
I feel like we could dive into this conversation for
I
a
could
very
talk about
long
this
time.
at
Yeah.
length. Yeah. But it really is, think about it like any negotiation. When you go into any negotiation, you're anchoring your expectations, right? Like, whatever number you give for when you get to the fundraising part of a conversation, you are anchoring your conversation off that, and you're going to be judged off very different expectations if you're anchoring at 10 versus at 20.
And then, as we start to wrap things up, can you share a female founder, investor, or leader who inspires you, and a bit about why?
Dana Settle. She is obviously a powerhouse in the venture world, and there are very few women that have started and grown the level of institutional fund that she has, and done it while maintaining like their own personality and quirks. And I really admire, like, she goes onto a stage and she's wearing her cool leather pants and like looks great while she's doing it, and didn't feel like she needed to fit a mold of like nerdy tech guy. And I think that's let her win a lot of deals that were companies that nerdy tech guy was gonna win. No shame on the nerdy tech guys. I love those too. But just when you have a North Star of people that like you would love to emulate and follow in footsteps in certain ways, I really admire the way that she's been respected for being a serious, incredibly successful, great investor, and like is still a woman that I can look to and be like, she's cool. I'd like to be like her.
I love that. She's her authentic self.
Yeah, or at least it seems that way.
And then finally, where can everyone find you? Where can they learn more about Wonder Ventures?
You can go on our website and on LinkedIn. We're all pretty active, wondervc.com, and myself, Taylor Brolhack, and Dustin Rosen, all on LinkedIn, and to varying degrees on Twitter, although we admittedly don't stay very active on there. But and you can also reach out to me on email.
Amazing. And I feel like you guys do so many LA in-person events.
Yes, if you're in LA and you want to get involved in the broader LA tech community, we are hosting events for the LA community, whether they're bigger happy hours or smaller dinners, pretty much on a weekly cadence. And so we'd love to get more people looped in.
Yeah, I feel like you are truly the queen of events. I'm always impressed.
Oh God, no, that's Taylor, our head of platform.
Well, this was so fun and very long overdue. So thank you for joining the show.
Thank you for having me, Ruffin.